Hi everyone, welcome back to Accounting with Morgan, and this is the financial accounting series, and today we will be talking about chart of accounts. So what is the chart of accounts? The chart of accounts is simply a list of every account a business uses to track its financial activity. Each account has a name, a number, and a specific category like cash, expenses, or revenue. It's like a master directory for all business transactions. So why is a chart of accounts important? It helps organize all your transactions into clear, manageable categories. This organization makes it easier to prepare financial statements, track your performance, and stay consistent across accounting periods. Without it, everything would be chaotic. Most chart of accounts are organized into 5 main categories. So you have assets like cash and inventory, liabilities like loans and payables, equity like retained earnings, revenue for sales, expenses like rent or utilities. Each of these can include multiple accounts depending on the company's size and the complexity. Here's a basic example of what a chart of accounts might look like. You see the numbers with the account, and each number range typically corresponds to a specific category. These numbers make recording and referencing entries easier. Every business can and should customize their chart of accounts to fit their needs. Larger businesses may create sub-accounts with more detail, while smaller ones keep it simple. The key is clarity, consistency, and relevance to the operation of the business. To wrap it up, chart of accounts is one of the most important organizational tools in accounting. It's the structure that supports accurate journal entries, financial analysis, and reporting. So that's it for this video. It's a shorter video. I just kind of wanted to go over that definition. So thank you guys so much for watching. Like and subscribe for more. And up next, we will be discussing how to record journal entries.